Hi, everyone. I'm Katie Talati, Director of Research at Arca. I'm responsible for analyzing and identifying digital asset and blockchain opportunities for Arca's funds. As part of our research, my team and I examine token prices and the market events that act as catalysts for shifts. Based on our research and market events over the past week, we want to share with you below some notable token price movements and what we think drove these moves. As a reminder, this commentary is not intended to be investment advice, investment research, or a recommendation. Please consult your investment professional for your own circumstances. All right, guys, so to start off this week, we have YGG. So YGG, it actually stands for Yield Guild Games, as you can see in our lovely graphic. So YGG is the largest gaming guild by AUM and players, focusing on the play-to-earn economy. So for those of you who haven't kind of been keeping up to speed on how gaming has developed within the digital asset space, play-to-earn gaming was popularized most recently by Axie Infinity, which is a blockchain-based game, but it essentially uses a combination of NFTs and a couple different tokens to basically players earn rewards whenever they play, and the value of their in-game assets also grows. And so it's actually really a really interesting way of changing the gaming model on its head, where in the past, usually traditionally players just buy a game and then they play in it, and then maybe they spend money inside the game if it's a free-to-play model, or if it is a purchase for a game on their desktop or on their gaming console. That's just the one-time price. So this is a whole new model. It's super interesting, obviously, because it means that it incentivizes people who put in the time to actually earn a reward from it. So is the idea that not because kind of playing some of these play-to-earn games, in-game assets are priced really high. It makes a lot of sense actually to rent out these NFT assets to people who begin playing until they can gain enough assets to eventually buy their own assets, and in exchange, essentially, the guild charges like a revenue share model, part going to the person who provides the NFT assets, and part of it goes to YGG. Anyway, that being said, yesterday YGG released a 2021 wrap-up highlighting their revenue, which was $1.3 million earned, and also the growth in assets. They have over $800 million in their treasury. The guild has partnered with 48 games and boasts over 10,000 scholars dedicated solely to Axie Infinity, which they basically expect this number to expand as other games launch. So again, if you've been kind of not, keeping up on the gaming space within digital assets, play to earn has become a very large potential sector of growth. And a lot of games last year raised money with the promise of launching games this year that would be part of this sector. So despite this very positive end of year report, YGG is down 18% week over week. All right, next up we have Ethereum down 14%. So for those of you that don't know Ethereum is a layer 1 smart contract platform. It's the largest in terms of just like number of nodes, transactions, usage, everything, mostly because it's been around and live since 2015. So yesterday it was revealed that crypto journalist Laura Shin revealed in an article in Forbes that through her research, she had identified the hacker responsible for the 2016 Ethereum DAO hack. So again, a little bit of a history lesson for those who aren't familiar with Ethereum. In 2016, the first DAO was launched to be an on-chain decentralized venture capital fund, essentially. The DAO actually raised over $150 million in Ethereum at the time, so you can imagine it's quite a bit more now. However, within a few months, $60 million of that was stolen from the DAO. So the funds were never recovered. And actually at the time, this was such a significant amount of Ethereum's market cap. It was like 5% of the entire supply, that the Ethereum community decided to fork the Ethereum chain, which created Ethereum and Ethereum Classic. So Ethereum Classic, the folks who decided to make a fork of that chain, they decided, well, the hack happened. We don't want to, go backwards and change this loss of funds. And those on the Ethereum side said, no, it'd be very damaging to the community if we weren't able to restore these assets if so much of the supply were elsewhere. So yeah, very, very, like I said, kind of a really old hack. Obviously we had we had hackers revealed, 2 weeks ago for the Bitfinex hack from 2016. So it's super interesting. And even in Laura Shin's article, which is worth a read, she points out that, so many years later, the infrastructure and the tooling is actually there to figure out who is responsible for these hacks. Whereas in 2016, and probably even only a few years ago, there really weren't as many ways to deal with these types of situations. So that was exciting to see. All right. So next, we have Nexus Mutual, which was down 14% week over week. So Nexus Mutual, which their token ticker symbol is NXM, is a decentralized insurance provider that is currently transitioning from a UK mutual to a stateless DAO. So Nexus Mutual is the first decentralized insurance provider that actually managed to work. They, however, have been frequently criticized because as a UK limited mutual structure, they have to KYC any member who would like to come in and purchase insurance through them, which is a bit of a barrier to entry for a lot of DeFi users or users in general in digital assets. A lot of them don't want to be giving away their identity. They don't want people tracking them on chain. And so the move to remove KYC is very important because it means that potentially it could increase Nexus Mutual's business and also offer the ability for more users within digital assets to access insurance. So this transition is happening in the next few days, since the vote was approved, and that's, like I said, should be pretty positive for this project going forward. All right, last but not least, we have Luna, which is up 11% week over week, one of the few projects in the green. So Luna, again, is if you haven't heard me talk about it, I think we talked about it last week. Luna is the token for the Terra blockchain, and it is up a ton in the last few days after announcing yesterday that the Luna Foundation Guard had raised $1 billion to support the growth of the Terra ecosystem. So part of the raised capital is actually going to be used to purchase Bitcoin for the reserve to backstop UST. UST is Terra's largest stablecoin. I believe it's over $12 billion in market cap currently. And the idea is that they have this Bitcoin reserve in case there is severe market volatility, which would cause a potential depegging event from UST. A depegging event would then lead to potential damages to the Luna price. So this is really to long-term strengthen the UST as a stablecoin, and also Luna as a market leader in the decentralized finance and stablecoin space. All right, everyone. Well, that is all I have for you this week. Thanks for joining. I hope you enjoyed our insights. Tune in here again next Wednesday at 1 p.m. Pacific to hear what's driving token prices.